Good morning, ladies and gentlemen. Today is Wednesday, July 17th, and it's another edition of the Investing Systems Trading Service Swing Trading Live Show. And my name is Bill McKinley, and I'll be doing a solo show today, but next week we will have our special guest, Jeffrey, back on for a real in depth show. But today I want to take a look around at a few interesting things and real quick, we'll look at the market, and then I want to dig into some of the open trades and some of the trades that are just now triggering and show you a couple of cool things. Before we go any further, I wanted to real briefly go over something here in on the homepage of the members section of the Investing Systems Trading Service. As you know, earnings season is starting to gear up here, and right now, as of today, we don't have any of the open trades that are getting ready to release earnings. Like they're not releasing tonight after the bell, right? Didn't release this morning, tonight after the bell. But over the next few weeks, the majority of stocks right now that are on the open trades list will be releasing earnings. And so here's how that works. We don't hold any stocks over earnings because of the fact that there's absolutely no edge, right? Stock can gap down 20%. It can spike down and then jump up, or it can gap up and then tank. And so anyway, we've gone over this, lots of times on previous shows, but so the idea since we started this is that we're not going to hold any stocks over earnings. So the way that it works is that if a stock was going to come out with earnings, say today after the bell, it will get the ticker symbol will get listed here, and it will get closed. It would get closed this morning using the opening price, right? Because everybody can easily get out at the opening price when the stock opens in the morning. If a stock was coming out, there's a handful of stocks release earnings before the bell. So if a stock is coming out with earnings before the bell, say like tomorrow, it would be in this list and it would get closed today using the opening price. So basically, the day prior to a stock that releases earnings before the bell, it gets closed at the opening price. And the stock that's releasing after the bell will get closed that morning at the opening price. And so, it's probably still going to be a few days, maybe even, but starting next week, there's going to be a pretty decent list of stocks that are still open listed here, just so you'll know how that works. And so that's kind of important because the last thing you want to do is hold a stock over earnings and get a big surprise, right? And so, we've mentioned this before, but typically over an earnings season, you get a lot more you get more negative surprises than you do positive ones. Or I should say negative reactions, right? It's not so much about, what were the earnings. It's about the guidance, and the most important thing is it's about how the stock reacts to the news. And a lot of times the stocks will. It seems like they tend to, especially if they've been going up, stocks tend to sort of give it back when they release earnings. So I don't really want to get into a whole lot of stuff about the market today, but this chart I want to come back to. But just real quick, let's look at one thing here. S&P 500. You probably, if you've been looking at charts out there on the internet, you've probably seen this chart or this mark anyway on everybody's chart, where it's basically an overhead resistance line, right? And I think maybe last week I had the lower line marked here, so this could be sort of a big megaphone pattern. But what I'm most interested in here is the idea that that line presents overhead resistance. And over the last few days here, it's interesting how the markets had this huge run up here, right? And got really close to that overhead resistance line, sort of starting to get turned back. The interesting thing about this, though, is that in the bigger scheme of things, this it could just go right through that and keep going, right? We're at all-time highs up here, and just barely pulling back. The last few pullbacks that we've had run up consolidation, run up consolidation, run up, a little bit of a pullback, and so this is just kind of keeping with the symmetry of these last few pullbacks here. So totally no big deal. And I have a feeling that, the next sort of major move is going to be based on how earnings season pans out, what the guidance is, right? So anyway, and it's probably a good thing that we're headed into earnings season because the market's starting to get kind of dull. We're in sort of the summer doldrums here where, you get a little movement in the markets and then, there's a lot of narrow range days, a lot of intraday boredom. Trend is still up, obviously. So I wanted to I wanted to do something a little bit different to start off today. And that is, I wanted to look at this ARWR, which just triggered, basically just triggered a couple of days ago, right? Just triggered a couple of days ago. But what I wanted you to notice and what I wanted to point out was the initial stop versus the target. And by the way, so let's go over here to the open trades, right? I'll show you something nifty here. You just type in ARWR, type in any symbol, and it's just going to isolate that particular stock. So you can look at all the details. So that's the easiest way to do it. I've found when you're looking at one particular stock is just to isolate it by typing it in the search there. So anyway, 712 it triggered. The trailing stop here, the T stop, is also the initial stop, right? Like it hasn't moved yet. And so you got the trigger, the stop, the target. And what I wanted to do real quick is I wanted to look at the percentage differential between the trigger, the stop, and the target, just to point something out. So trigger 2690, stop 2580. Trigger 2690, stop 2580. Oh, and by the way, this is the calculators page, right? So up at the top, we had a little issue with the server running the calculators for a while there, and so I had to remove it for a small period of time. But anyway, calculators are back up and running, and this price differential calculator here, this is the one that I use the most frequently. I use this thing all the time. Real simple. You just so like in this case, what we're doing here is we're typing in the trigger price, and then we're typing in the stop, right, as price 1 and 2 to figure out what the percentage is if it hits the stop from the trigger to the stop. So you'll see that's 4%. The target up here at 2850, which let's see, it almost opened up there, but the target at 2850. Now remember the stop's 4%. This target is 5.9%. So what you're going to find is that even though sometimes on the chart, like if you look at this, it's almost an optical illusion, right? It looks almost like sort of an equal distance, and this is going to vary too. There's another one I want to look at where the target's considerably a larger percentage of the initial stop. And so let's look at that real quick. But I believe it's this WGO, and this is another really good example. And the reason I wanted to point this out is that you're always going to find that the target is going to be a bigger percentage than the initial stop on every single trade. But if they seem really close, kind of like that last one, I mean, it's you always hear about 2-to-1 and 3-to-1 risk rewards and all this, but you don't really want to be so concerned about that. And the reason is, and this is why I brought this up as an example, this thing triggered right here, and the initial stop literally moved up within a couple of days, right? And so that initial stop is most likely going to ratchet up relatively quickly. Now, the only case where it wouldn't is if the stock immediately started to turn down, right? And so, in which case, it is what it is. But we don't see that too often. Typically, we see that these stocks do get a little bit of follow through the upside right away. And what you'll find is that the initial stop is going to ratchet up typically within, 1 or 2 days. And so that's one of the things to keep in mind when you're looking at like the risk reward. So anyway, so let's see, 38.25, 36.50. 38.25, 36.50. So in WGO, the trigger to the initial stop, 4.5% risk, right? And so then we look at the target up here, 40.90, and we will see that has a 6.9% difference. So there you go. So anyways, our target on WGO, is 6.9% away from the trigger. And now that this stop has ratcheted up to 37, right, we can put that in here and see that, so at this point, we're looking for a, call it 7% target, and we're risking 3.2%. So within literally a couple of days, now you're at over a 2-to-1 risk reward. So I just wanted you to keep that in mind. That's something that, we haven't really talked about that a whole lot. So I wanted to kind of bring that up and also show you that the calculators are back up. This is a pretty nice looking little setup here, right? The market itself sort of feels like it wants to dip a little bit. Interestingly enough, we just had a big up cycle in the market, and that's why the majority of stocks that we had on the pending list have ended up triggering in on this up cycle. So there you go. Take a look at the open trades here. There's a few like really interesting examples of open trades that I wanted to go over here, and there you go. The ARWR and WGO that we just looked at literally have triggered in. We got a couple of new ones here, but what we're seeing is that we don't have a whole lot that have been triggered in the past few days. So these the earnings season, getting back to that, is kind of it's kind of what I would call like sort of a reset type of thing for the system, because what ends up happening is as we start going into earnings season, these stocks, these open trades will start to get closed regardless of where the price is, right? I mean, at that point, it's all based on like the date of earnings, and so everything's going to sort of, and every one of these, just about every one of the, I'm looking at the whole list here. There's literally like three open trades that are not coming out with earnings in the next few weeks, right? What I do, and this is kind of cool, you can do this if you want. I mean, it really depends on, since I'm monitoring every single, I realize that most people aren't going to be holding, every single open trade unless you're running a hedge fund. But what I do is I export this list using the CSV here, and then I basically just import it with a couple of clicks right into a watch list at my Thinkorswim. So each day I have every single one of the stocks that's on the open trades list up in my Thinkorswim. And of course, I sort them by percent change, right? It's kind of cool to look at. So, like, I can see that Twilio, right now, as of today, Twilio is the biggest percent gainer in the list right now. Of course, it's only up 1%, and amazingly enough, this WGO, this is the biggest percent pullback in the list, and it's down a couple of percent. No big deal. So anyhow, so that's that. Yeah, the calculators. If you go to the calculators page up in the top nav, let me pull that down a little bit. There you go. Go to the calculators page. You'll see that there's a whole bunch of different useful calculators on here, and each one has its own specific sort of thing you can use. And down at the bottom here, you can watch this video that explains how to use each one, but they're pretty self-explanatory, and you can read the notes over to the right to kind of help you work with those, but really extremely handy. So these calculators, besides determining how much risk you're going to take on any given trade as a percentage of your portfolio, you can calculate the percent differences between a stop, a target, the current price, and so anyway, calculator's really awesome feature. I wanted to go down and look at, well, the first thing I want to do is look at the CVI, right? This is the CVI is actually the right now it's the top gainer in the list, and I have managed to mark on here. Now, here's the interesting thing is I don't have every single trailing stop on here, right? And the reason is that if I put every trailing stop on here, they'd just be all mushed together. You wouldn't even be able to see them. But this is really a great example of, well, it's a great example of sort of, hey, when things work, this is how it's supposed to work. You don't really find too many stocks that go into uptrends this sort of persistent and at this angle. And this is not typical of just your average random stock, but it's an amazing sort of example of how the system uses the trailing stop. And the other interesting thing about this is look where the target is, right? I mean, if I zoom back in time and we sort of look at this as it was setting up, right? I mean, we actually had a looks like we had a trade in this back here that got knocked out around break even, but it's stuck in a really nice uptrend, right? And it's had its little patterns in that, and so this most recent trade right here, you know, had a kind of a big sell down there, and then it popped back up and it triggered, right in this area. 44.95 was the trigger price, so somewhere around 45, even a little bit higher, 45.50. A lot of times it doesn't matter, but the initial stop was sort of way down here, right, way down below the somewhere around these lows of the pattern. Sometimes you'll see that the initial stop is not quite at the lows of the pattern. Sometimes you'll see it below the lows of the pattern, but it's always going to be less of a percent than the distance to the target. Anyway, if you look at this, you would have thought when this thing hit the target right here, you would have thought if I let me cut that one day. There we go. Cut that one day off of there. So it formed like this really nice cup, and it did hem haw around a little bit after it moved above the trigger, moved back down below it, and that. So this stop didn't actually kick in till it was starting to move away from the trigger. But my point here is that by the time it hit this target, you thought, I would have thought, man, this thing, this had a really good move here. So you think about pulling some off at the target, pulling half off at the target. It can, honestly, you can pull it all off at the target, move on to the next one. But this is a great example of just how far past the target these stocks can go. And as we go through some of these examples, you'll start to notice that sometimes the target is just basically sort of the target can get surpassed and the stock can keep going. And that's one of the reasons that you might want to, stick by the strategy we always talk about, which is taking half off at the target, right? You got a decent little gain going, and then use the trailing stop for the remainder of the position, right? And that's how you're able to ride one for a move like this. And interestingly enough, the parabolic stop started kicking in shortly after it surpassed the target, right? And I think that I'm pretty sure that there was a couple of more parabolic stops I didn't get marked on here, but I started just over this past week or so. I started putting these parabolic stops each night because they do tend to ratchet up, every couple of days. And so, this one didn't get hit. even though it looked like, and then on this one, I mean, that looked like a reversal candle there, amazingly enough. And so this really looked like at the close that day, I marked this parabolic stop. I would have practically bet that the following day you would have gotten, a move down through that. But amazingly, very next day, back up. And so here we are. As of right now, as of the update last night, there's that parabolic stop and still not getting tagged. So once the parabolic stops kick in, it's probably not a bad idea to go ahead and protect the rest of it there. And so, see, here's the thing is like, we have this system and all this stuff's being calculated by the back end and it's real sort of rigid as far as like all the logic that's happening. It's very systematic, very sort of disciplined, but it allows tons of flexibility as far as how you want to actually in real life sort of manage the trades, right? So, and a lot depends on position size and sort of what you're doing, but obviously, there's several ways that you could play this. If you had enough shares to split it into thirds, ideally you would, take a third off at the target you always want to use the trailing stop to protect whatever you have open at the T stop, right? I should say T stop. But in the open trades, you'll see that it says T stop. You always want to protect that. And the reason is because every time that a stock or any time that a stock touches the T stop, then boom, it gets moved to the closed trades. It actually goes on to the closed today and then it gets moved into the closed trades. And so that's how we close them, right? Stock goes up, hits the target, we don't close the trade. Sometimes you'll see the stocks that'll go up, they'll hit the target, and then start to come back down and maybe hit a trailing stop that's maybe just above, a little bit over break even or whatever. And so that's why sometimes like the way that we're displaying the stats is not always going to reflect. Well, it's typically not going to reflect exactly what you can expect in real life trading. And so we just thought that, well, the way that Jeffrey created this system is that the T stop, the trailing stop, is what closes the trade every single time. So kind of cool. But you can do a lot better protecting your gains especially once you get past the target. You can do that. So let's look at some of these other ones. Roku. Roku had an amazing day yesterday. The market wasn't so hot, but it seemed like everybody was focused on Roku for some reason. I don't know why, but this is a really interesting one in that the parabolic stop on Roku just kicked in last night, right? This is the first parabolic stop, and if you watched all the shows that we've done, you'll probably remember Jeffrey talking about on one of these long range days, basically protecting your gains about halfway up the super long range day. That's where you want to protect your gains is roughly, at the midpoint. And so it's interesting to me because this is the first time that I can recall that I've actually seen the parabolic stop appear at the just under the midpoint, it looks like, of this particular bar. So there you go. This trailing stop as of last night, and let me verify that. Yeah, trailing stop, $99. And so, sometimes you got to use a little bit of judgment, right? The trailing stop is coming up sort of based on, this price action. And since there was this huge long range day up yesterday, the trailing stop, I mean, tonight will probably, the trailing stop probably come up here over $100 tonight. However, at this point right here, if my guess is that taking some off right there at the target or a little bit over the target would have been a good idea, sell half the position. But on the outside chance that you were like riding this thing, you definitely would want to go ahead and probably protect most of the position up here at the parabolic stop. I mean, that's what they're for. Once that parabolic stop kicks in, and if you read the section on parabolic stops, um, when the price has an accelerated move to the upside and kind of an unsustainable rally, and this may or may not be the perfect example of a parabolic stop, because sometimes you see like these runaway patterns. Not really on this chart, but anyway, so Roku, big day yesterday. This thing's up significantly. Um, let's see, there was some other really good examples of some stuff I had on here, and I just wanted to like go down the list, and oh, I know which one I want to look at. It was AMD. AMD, another real super popular stock. People love AMD, and semiconductors. This thing has just really been on a tear, right? Real nice uptrend since the beginning of the year here, and this pullback here in June, kind of interesting because as you guys recall, and we talked about this I think last week or the week before, May, the whole market basically pulled back through the month of May and then rallied through the month of June. And the funny thing is that AMD basically did the opposite, right? Well, it was kind of flat for most of May, but it started rallying into the beginning of June and then pulled back. But regardless of that, very popular stock. And so here was the trigger back here. It actually triggered this day, right there. That was the first close above the trigger line. And so, of course, the following day, the idea is that the following day, if the price is trading over the trigger price, then you can feel free to jump in, not sweat, the nickels, dimes, and quarters, right? And so that doesn't mean that you got to pull the trigger, immediately at the open, and and so you can wait 5 minutes or 10 minutes or whatever. And of course, there's a couple ways of doing it here. We've talked about this. I'm going to say that after looking through so many of these trades, I'm going to say that you've got maybe about, it's like a 50-50 chance. If you see a stock on the triggered today list, right? That means that the following morning, if it's trading higher than the trigger price, it's a buy. And so there's two ways of doing it. You can watch the stock open up, and if it's opening or trading above the trigger line, which is 30.50 here at the open, then you can just go ahead and just buy it, right? And in some cases you may be getting in, considerably higher than the trigger price, right? In this case, let's see what the open was here this day. Open was 31.10, so you're talking 60 cents. No big deal. You can do it that way, or you can set a limit order to get filled right at the trigger price. And what I'm going to say is that it's a 50-50 shot, right? There's a lot of these stocks that they open the next day above the trigger, and then they never look back. They just keep going, and you wouldn't have gotten filled. And so that's probably, not a great idea to do that on every single one. Although, if you don't get filled on one, you just move on to the next one. And if you did it that way, I realize that most people can only have a limited number of open positions, and so that would actually be one way to sort of let the let the chips fall where they may, so to speak. And that is that if you set a limit order at the exact trigger price and don't get filled, that's going to kind of prevent you from reaching your maximum amount of positions too quickly, right? So the downside to that, like I say, is that you will see certain stocks. Well, let's go back to CVI here. So, well, this one, you would have actually, if it closed above the trigger price this day, right? Following morning, it actually did trade down. Within the next few days, you could have actually gotten filled on this at the trigger price. Let's see about Roku here. Okay, Roku's a good example, right? So Roku closed, significantly over the trigger price this day. Next morning, the open was, quite a bit over the trigger. And so if you set a limit at the trigger, then you just never got filled on this one. So, but the thing of it is, you can't really, in all trading, you can't look back, right? You can't look back and say, what if? You just have to move on. And so that's kind of that's kind of the way that if you've been doing this for long enough, you'll realize that you just have to do it that way. Look at SeaWorld here. If you guys recall, back over in this area, when this SeaWorld actually triggered, I talked about it here on the show. I said it was a pretty nice looking pattern, and so you can see that this one actually did give you multiple shots at the trigger price. What's interesting about this, there's several interesting things about it. One is that this is the only initial stop I've ever drawn like this, and I did this just to sort of point out how the initial stop, once it triggered, was calculated below sort of the lows of the entire pattern, which made complete sense, obviously, right? But anyway, that's the way that the system computed it, and so anyway, it wasn't long. It was only a few days. I think I talked about it. Would have been this day right here, this Wednesday. And a few days later, up here at the target, I don't have all the stops marked on here. I've basically got the first ratcheted up stop marked here, the first trailing stop, and then back over here. I guess once it hit the target, I added this one. So I've been doing that lately on some of these. I've actually been marking the stop and then just sliding it up and changing the numbers. So here's another good case. I mean, look at how you get that. Basically, yesterday being a pivot high day, it's about to come down and hit this parabolic stop, and so this would be like the perfect sort of case where you want to sell half at the target, if not all. I'm going to suggest that a lot of the stocks have been hitting the target and going way past them lately, and so I'm going to say that if you're just selling everything at the target, you're probably going to shortchange yourself, and you're not going to catch one of these real big movers. One of these double-digit percentage gainers, which we have quite a few of. Right? Some of these trades have been open for a while now. Some of the bigger percent gainers on the list here, right, have been open since June, mid-June. So here you go. This RGEN, this thing's been open for a month. Some of these other ones have been open for quite some time. And so anyway, in order to catch one of those substantial percentage moves, it's going to take some time, right? And so the stocks that triggered a couple of days ago, or a week or two ago, may or may not have reached the target or passed the target or whatever. And so the ones that don't really get any follow through, right, they go up a little bit, maybe the stop gets ratcheted up a little bit, they tend to get stopped out quickly and around a break even, for maybe a small gain or a small loss or kind of a wash. And that's kind of the idea. And the ones that actually do follow through, they tend to stay on the open list for a long time, right? Because that's the idea. Like, take this one for instance, this CDNS. Boy, this thing looks pretty interesting up here. Notice that parabolic stop did get tagged. However, and this is one that I basically have not marked all the stops on. I just keep sliding this up, right? Like this trailing stop, just sliding it up. But so, here's another example where, you would not have gotten filled if you set a limit order at the trigger price, right? Because it just, and we see this kind of frequently. So it's a good example of why you don't want to be afraid to jump in, even though it's gapped up a little bit and fairly significantly above the trigger. What I was going to say is it's not out of the question, and you can use the calculators to do this. So, say the trigger's 64.90 and you got in this day at the open at 66.20. So let's just see what that is. 66.20, 64.90. Oh, I did that wrong. We tried it. 64.90 66.20. All right, so basically 2%, right? So if you just pulled the trigger right here at the open that day, you would have jumped in 2% over the trigger. So guess what? You take your target here and you say, okay, well, what I'm going to do is add 2% to the target. So you can go down here to this other calculator here. Where did it go? Oh, all right. So the target's 68.65. 68.65. And you want to figure out what your target should be. 70.02. So there you go. I'll mark that on here. So 70. So your target would have actually been, I gotta almost find like sort of a different color here, because I try and keep my colors consistent. So, and this is basically just I mean, you can choose to do this or not, but this is just maybe a little strategy that you'd want to use to keep everything sort of consistent, right? And I'm not sure that I would necessarily recommend fooling around with with adding the extra 2% on the stops, because the stops are being calculated based on the actual, setup and price and a whole bunch of different factors. So I would stick with whatever the trailing stop is. But as far as like, setting your own target, if you actually ended up getting in a couple of percent higher than what the trigger price was, it's not unreasonable to make up the difference with by setting your target, that much higher, right? And you can easily use those calculators to figure that out. So, and as you can see, this is one that's been open since basically, so I'm sorry. So it triggered this day. And so this particular open position now has been open for, well over a month, kind of going on 2 months. And so what's going to close this trade is going to be, earnings are coming out on 7/22, which is, I can mark that on my chart real quick here. And so here you go. Earnings are on 7/22 after the market closes. So so basically 18 Friday, Monday. So on Monday, whatever the, provided that it doesn't come down and hit the trailing stop, right? That trailing stop's really tightened up. I mean, basically, it's kind of floated all kind of along up here with the price until it's landed up here. That's where it is right now, and it's kind of a nice pattern, right? Got a little consolidation right at the highs here, and so this thing in the next few days, this could easily just like sort of bust out. You can see when this thing moves, man, it really moves, but it could bust out here and be significantly higher. But this particular day, on Monday, this is going to be on the list on the homepage there under, stocks that are getting closed today ahead of the open, and then or ahead of the close, and then it'll use the open price there. So next week is when I think the bulk of the stocks that are on the open list, if they don't hit the trailing stop before that, will get closed. And so anyway, so that's another interesting one. Let's see. Let's look at Facebook. Facebook, real super popular stock, always in the news, always talking about. As a matter of fact, on CNBC right now, they're having the Facebook hearings, right, about their Libra cryptocurrency. So that's kind of interesting stuff. And it's actually, I want to kind of tune in and watch some of this because it's sort of fascinating. Sort of fascinating, the whole idea that Facebook wants to create its own global digital currency. I mean, the implications of that, and people are for it and people are against it. So I don't know. I never joined Facebook, so I don't know. But anyway, Facebook, just the thing of it is we're using technical analysis. We're looking for, you know, these stocks are basically just sort of short-term vehicles to park money in, ride the trends, the up cycles. Ride the up cycle when the momentum, when the momentum starts to fade and this thing, the up cycle's over, then we want to get out, move on to another one. So here's an instance where this thing triggered back here on 6/11. So that was basically this day right here, right? This gap up day that closed up here. That was the first day that it closed over the trigger price. And so that night, like, you log in, and after we run the update, which has been running 2 to 3 hours after the close, sometimes a little bit later. It depends on what I have going on, but some nights are later. Typically Friday night we go over everything with a fine tooth comb, and so the Friday night updates tend to be running a little bit late, but no big deal. So I just want you to realize that. But you can check everything in the morning. And so Facebook triggered at 175.25. This is a case where you could have gotten filled right at the trigger price, or you could have gotten filled, the slightly higher price, a few bucks higher. Percentage wise, probably not a big deal. And then it just kind of, it took off and was basically at the target a couple days later. I'm not even sure what that gap up is, but boy, that's kind of what you want to see, right? And so anyway, you can see the progression of trailing stops here. And then interestingly enough, if I zoom way in here, these parabolic stops are pretty amazing, right? And this is something. The parabolic stops are something you won't really find anywhere. And so they start to kick in after the stock has had certain type of behavior. It depends on, it's a function of both price and time and how quickly the stock runs up before you'll start seeing these things. But once you see the parabolic stops kick it, here's a target way down here. Notice how, they're typically, and I would say typically because we just looked at one that was like in the middle of a price bar, but typically they'll start kicking in and be like just below one of the recent lows. So this one was at 199 and the low this day was 199.16. So really super close. And then the following day, like this night after the update, what was that? On Monday night after we did the update, parabolic stop, slid up to 201.80, and the low was 201.82. But you can see that following day, which was yesterday, ratcheted up again, and so far today the low is 203.03. So today's low within 3 pennies of this, but we've talked about how the parabolic stop helps you kind of squeeze the last little bit out of the run. And so you can sort of see that, as of right now. And so, hey, who knows? I mean, this could easily get tagged here while I'm talking about it. But the fact is that that's an extra $4, right? An extra $4 you could squeeze out of profit by using these parabolic stops. Now, here's the other thing: is like suppose you're more of a like, hey, I want to kind of hang on to Facebook, right? If you're more of and I'm not going to say investor, obviously, because the way that these cycles work, the trailing stop is going to catch up to the price. It's basically just a matter of time, unless for some crazy reason the price just and it could. Right? Okay, there you go. The parabolic stop just got tagged. And so that's where you kind of have to make the decision yourself about, how you want to play these things. And so if you're more of if you think Facebook's going up here to 210 or 220, or if this trend's going to continue, then theoretically, like our system is not going to close this trade until it hits the actual trailing stop, which is right there, 196.25. So let me draw a trend line under these lows here, so you can see that the trailing stop itself is designed to sort of keep you in and it's designed to really give the stock enough wiggle room based on its own ATR and price behavior and all that good stuff, support, different things, but it's computed to be able to keep you in through sort of normal price fluctuation, right? And so if that's what you want to do, if that's sort of what you're thinking in your mind is like, hey, I kind of want to stick with this uptrend through the normal price fluctuation, then you would basically just follow along with the system trailing stop. And so if you wanted to be more aggressive and perhaps you got bigger positions where you're able to split them up, then the idea is that you take some off the target, follow the system trailing stop, then take the remainder of the position, use the parabolic stop to lock in even more, but maybe hang on to a third of the position at that point. So I guess it would be a quarter, right? If you took off half at the target, and then you had 200 shares and you sold 100, well, 200 shares of Facebook. Say you had 10 shares of Facebook and you sold 5 of them, and then you're in for this run. You got another 5 shares, and you got the trailing stop. You get up here and you say, well, yeah, I'm gonna take 2 of the shares and use the parabolic stop to lock in some more, and then use the trailing stop. So now you got 3 shares that you can just sort of ride with. Or I should have said parabolic stop. Ride with the trailing stop. So, and this trend could potentially continue. Another thing I wanted to mention is that if you're following along really closely, which I'm sure you are, with some of these open trades, you'll notice that the T stop literally on some of these is moving on a daily basis, right? I mean, every single day. And that's why I don't have a lot of them marked on here, because it gets too cramped. It's too difficult, like, well, I've kept up pretty well on AMD here. I've had like just enough room, but sometimes I look at it and I'm like, okay, well, I'm not gonna mark another trailing stop like in between these two, right? And so that's kind of the idea, is that you will see that trailing stop a lot of times like trail up sort of on a daily basis. It just really depends on on what the stock looks like, and see if I can find. Yeah, here's an interesting one. SBGI. No parabolic stop. This was kind of it's kind of crept up. I think you guys probably remember about the show I did back here. I drew this trend line and we talked about this because this was a beauty. I mean, this is the kind of price pattern that tends to work out pretty well, right? The big spike up, the pullback, trend line break, and so anyway, there you go. It took a while. It took a while. This initial stop basically stayed here. I think there might have been one little ratchet up somewhere over here. Once that sort of pullback happened, then the stop came up here. But this is one where I haven't marked all the stops on, but this, because they get kind of squeezed together when you zoom out. Anyhow, so past the target, and then a lot of times you'll see that it comes back down to the target. So in a case like this, you have to decide. Say you took half off at the target, and then you were feeling pretty good about it. After it came back down, like these couple of days here, you're thinking, oh man, I probably should have sold all of it at the target, right? And then you never know what a stock's gonna do. They surprise you, and then so all of a sudden you get this big move up here, and then basically, you're up here and you're thinking, okay, well now what? Because the trailing stop's still way down here. In a case like this, it's decision time. You can either decide to protect the other half at 56.70. Right, now today's low here was 56.74. Right, so I mean you came really close to like tagging the target from above it, but here's the current trailing stop right here, 55.80. And so this is where you can use your discretion and kind of what you think about this. And something else to keep in mind is, I'm gonna look over my other computer here. Something else to keep in mind is when the stock's going to get closed based on earnings. So that's not till August 7th. So that's basically earnings on this are so far out in the future that it doesn't really come into play. But what I was about to say is that you get into a situation like this, and just suppose these guys were coming out with earnings like next Tuesday or Wednesday or something. You might think about actually just going ahead and raising your trailing stop, your hard stop, up to the target and just protect it at the target, right? Or maybe like the trigger here was at 52.40, and so chances are maybe you got in a little bit higher, and so same sort of thing here. You just slide the target up, and in which case you got out a little bit higher, and then you would have gotten out here. So there's some flexibility in there, I guess is what I'm trying to say. So let's just blast through just a few more of these. I don't want to. Did we already look at this one? Can't remember if we looked at the LSCC or not. Now, here's the thing: you don't have to sell at the parabolic stop, right? You don't have to sell at the target, right? You can, I mean, you can do some fancy footwork, and like I said, there's a lot of flexibility. But so what'll happen sometimes? Like here's an interesting scenario. This particular one, I'm just looking at the list. I pulled this up random. Suppose you were in this thing, and you sold at the target half of it, and then you protected it at the parabolic stop, and then you got out. Boom, pretty decent little gain there. Our system, if this stock were to, and I'm sure this is probably going to trail up a little bit, but there's a chance that like this stock comes back down and hits our trailing stop here, and the system's going to show like a real minuscule, 1-2% gain, when in reality, you captured a significant gain, right? And so that's what the max price is about. So if you take the trigger, which is 1450, and you take this high, 1707, so you got 1450, 1707, right? So this stock actually moved almost 18%, from the trigger price to the high, 17.7%. And so when you're looking at the closed trades and you see like the min and the max is going to be that move right there, right? And so it's just a way of sort of calculating it. So that's how much it actually moved, and you're never really going to capture the max move, but the min move, right, where it shows the min, is going to be this distance. It's going to be the distance from, because remember, the trailing stop is what takes us out, which closes the position every time. And so, most people are going to capture somewhere in the juicy middle of all that, right? I mean, you're not gonna get the max move, because there's no way you're figure out how to get out at the exact top, and plus, the trailing stop, or even the parabolic stop's never going to be, at the top, at the high of the move. It's always going to be kind of below here. So, I mean, you could have actually, you could do the calculations or whatever, and then of course, it has to do with your entry point too. Um, Here's a case where, and I'm just throwing this out here because this is just sort of how it works. Like every stock is different, right? So this is the day it closed above the trigger. Next day you have this big gap up, and you're thinking, geez, I should probably, well, let's see, the trigger's 1450, and the open here is 1513. Big scheme of things, that's not a whole lot, but percentage wise it is. And so you got to kind of keep that in mind. But so, you had a couple decisions here. You could have said this day, well, I'm going to wait and see if, I can get it a little bit closer to the trigger. And so there's nothing wrong with that. I mean, there's nothing wrong with, you see a stock close above the trigger and it gaps up significantly. Just kind of hold off there and see if maybe you do get a little bit of a fade, that next morning, which you did, right? And so this thing faded down, and the low was 1456. And so, I mean, you literally could have gotten in, 10, 20 cents above the trigger, Or, if you passed on it and were watching it the next day, you could have, same thing. You could have basically got it at the trigger. But so anyway, this is just kind of an example of, of how we of once they're closed, how we display them. And the point here is that theoretically you could have captured, a decent move here because that was 17.7%. Um, if this stock were to just like drop like a rock and come down here and hit this, well, let's see, 1450 to 1515, and it's possible, and I've seen this before. Yeah, so that would be like the min would show 4.4%, right? And so my guess is though that this is one of those where each day that I ratchet this up, I kind of I just ratchet this up and change the price there. So anyway, there you go. Let me look down the list here. There's I know I'm running out of time here, but there was a few other. There was another interesting stock, and I can't remember which one it was that I wanted to look at. So maybe was it JetBlue? Oh yeah, it was. It was JetBlue. JetBlue was interesting because, and let me make sure I've got the. Okay, so the stop now, the T stop is at 1855. So I hadn't updated this one yet. I didn't update this one last night, but I did look at this yesterday because so as of last night, the stop had moved up ever so slightly, and so you can see why moving the stop up a nickel on something like this is not always worth marking on the chart, right? So if I wasn't doing this live on the show here, I would have basically just dragged this over here and changed the number to make things easy. So, but here's my point on this, right? And this is kind of interesting, is that this was one where the trigger was, I got the trigger marked here 1870, right? And so there's basically the first day it closed above the trigger price. There's the open the next day, and ran straight up, and the high this day and the high this day was 1950, like the very high of the day, and the target was 1950, right? And so think about, this. Well, this is a pretty liquid stock. JetBlue, extremely liquid stock. If you had a sell limit order in at 1950, you may or may not have gotten filled on that. Since that was literally the high, that may have been, there may have never been a bid at 1950. That was obviously the high tick, the ask, and so it's debatable whether you got a fill on this or not. And so um, anyway, this is really interesting because it came back down, and this stop was still far enough away, right? This 1850 here was still far enough away that, and we talk about keeping the trailing stop far enough away for normal price fluctuation, within sort of an upcycle, and there you go. You had a decent pullback. The low here was 1861. And as you can see, this stock doesn't have a real extremely high ATR. I mean, these are 25-cent increments, and so basically, the theory here is that you got this little dip, and then yesterday, for whatever reason, I didn't see the news. Big long range up day, which is kind of folding back over today. So this is kind of an unusual situation, I should say, because it's possible that you rode it up to the target, didn't get filled, pulled all the way back down below where you got in, still didn't hit the trailing stop, and then rocketed back up to the target. And so, case like this, selling at the target. This is a good example of why taking some off, selling at the target's not a bad idea. And of course, you can sort of play them. You can play them differently for each one, right? So here's another kind of this ring central is kind of an interesting one, but you can see where you can see where it like ran up to the target, and it's just kind of waffling and waffling, hem hawing around the target. Let's see. I want to make sure that I've updated. Yeah, 118. So the stop, this stop is trailing way back behind here, way back behind. So anyway, that's basically out of all the stocks I had written down. That was pretty much it. So market's starting to act a little bit weak here, right? And so and so here's the thing. We've kind of been through the big up cycle. Oh, take a look at Roku's like all of a sudden, yeah, biggest pullback on my list here, right? After a huge up day, Roku is now down 2.5%. But I mean, it was up huge yesterday, and I missed what the news was too. So anyway, we just had a huge up cycle. That's why all of the stock, I won't say all of the stocks, but a whole lot of stocks have been on the open list for quite some time, right? And the good news is here is that some pretty decent gains in these, and most of these are going to get locked in, right? If the market starts to sell off here, between any sort of down cycle, right, where the trailing stops get hit, between that and earnings season over the next couple of weeks, this list is going to get pared down significantly. And like I said before, like literally every one of these besides three of them is going to get closed in the next few weeks over earnings season. And then what we'll see is that a whole new sort of fresh batch will show up over here on the pending list, right? The pending list right now is kind of small. Right, kind of small. Not much happening over here. I looked through these, and the one that I really sort of like, as far as the pending, is this SEDG. So keep your eye on this. This is a good looking pattern. Now I haven't looked up the earnings on this because, and I should probably do that, but I'm only following along the earnings with the open trades. But this is a pretty nice little pattern here. Right now, it would take a close over this level. But again, on the pending list, the idea is that this may have started off with like a trigger up here, and then it kind of ratchets down, and and then eventually, theoretically, if it stays on the list, it'll meet the price. So this is the one that I think has some pretty good potential. But the cool thing is like you don't even this is all you need to really focus on. Like after we run the update, so later in the evening or at night or in the morning, all you really need to focus on is the triggered today list. When you see something pop in here, that's the one where you'll basically look to enter it the following morning if it's trading above the entry price. So there you go. All right, hey, well, thanks for tuning in, you guys. It was kind of interesting to look at some of those different scenarios and situations. And if you're new here, just be patient because you get this big up cycle in the market here, like this. We've just had this, and so since the beginning of June, we've had a lot of these stocks like triggering in, becoming open trades, depending on how deep this little pullback here goes. That's going to sort of determine how many of them pull back and touch the trailing stops. If we got a big turnaround tomorrow and a huge long range day up, kind of like something like this, which wouldn't be out of the question, right? Then we'd be looking at a lot of these things getting closed over earnings probably starting next week. So next week's the big earnings season, and so I will have Jeffrey on the show next week, and we'll go over some other kind of cool stuff that we've been talking about bringing to the show. So thanks for coming on. We'll see you guys here next week.